So sanctions is one. The other example of an economic weapon is tariffs. Do you think President Trump and the US, they will succeed in their effort to now reindustrialize the United States?
It is certainly the objective of the present administration to try and reindustrialize the economy. That was also substantially also the objective of the previous administration. It had a series of measures which were, I think, established were not terribly effective. The Trump administration came in, and of course the tool that they're using to try and achieve their goal is essentially the tariffs. There will be some effects, that is to say, in particular because the economic situation as a result of the sanctions and the general breaking of economic relations between the European Union and the Russian Federation on energy and other matters is so dire that European firms are, in fact, to some degree, going to be relocating to the United States where the energy situation is more favorable and they have other advantages. But I don't think that's going to be terribly substantial. And the problem with tariffs is that, well, you know, it's an administrative measure that's imposed. They can't impose it for 30 years. They can impose it. You can expect them to continue for the lifetime of this administration, which in our system is another 3 years. And so beyond that point, the future is deeply uncertain. Rare earths and particularly of gallium, in which we have a essentially complete dependence on the People's Republic of China.
So you believe that China has effectively won its trade war with the United States?
Yeah. What happened there was that, of course, the U.S. Trump administration started with a very provocative escalation of tariffs against China, which they then withdrew because they realized that they were going to interrupt the supply chain for a whole spectrum of consumer goods. So that was already in the first quarter of 2025. The next phase of it, or the most recent phase, the Commerce Department expanded something called the Entities List, which threatened the viability of financial transactions for a fairly broad spectrum of Chinese companies doing business not only in the US but all around the world. And China responded by saying, okay, you'll do that. We will put sensitive materials, rare earths and gallium, on a restricted export list, and particularly prevent their use in dual-use activities that might benefit an American military that might be gearing up for a military confrontation with China. And what happened? Very quickly, the American administration came to some realization, I'm sure, that the communications channels with the affected industries were quite open. They went and negotiated a provisional truce, which was then codified, or let's say agreed to, essentially signed off on by the two national leaders in Korea. China said, we'll give you a relief from the export controls for 1 year. This is what is known in judicial parlance as a deferred adjudication. And the effect is to say that the American position will be assessed again after a year. And so I think we're in a situation where the relationship is now stabilized because there's nothing that the U.S. can do in a year that will significantly affect its need or its availability of rare earths. And there's nothing they can do on any time horizon that will give them an alternative supply of gallium, which is essential for advanced microcircuits, microchips, and so forth. And so now I think we're looking at each other through, let's say, realistic eyes, and that's a good thing. That suggests that there's a bit potential to stabilize the relationship, at least on the surface.
So we have talked about 3 economic weapons so far: sanctions, tariffs, and rare earths. Now let me come to the fourth one, the US dollar. Do you think that the era of dollar as the world's reserve currency is over?
There are two aspects to this issue. One concerns the settlement of bilateral trade. And there you're going to have, and this was essentially a product of the US policy in the last administration, a very substantial move to settlement in national currencies. But there's a second question, which is the question of the reserve asset, which has been for 30 or 40 years now, essentially the unbacked United States Treasury bond. And that's a large, very liquid, very stable pool of financial resources. And so long as the world does not move to a completely balanced trade, these will still be accumulating one place or another. I think it is much harder to replace the role of U.S. government debt with some combination of other assets. Gold obviously can play a role and so forth, but to do that, you have to essentially mix a portfolio of alternative assets, and that gets you into all kinds of, let's say, speculative risks. So my guess is that the role of U.S. government debt as a reserve asset will continue, not forever, but for the time being.